Too late, too soon, or just right? Will global central bankers achieve a Goldilocks scenario? Welcome to Macro Matters, your regular look at what's driving the global economy. I'm Ramzan Karmali. On Wednesday, the Federal Reserve is expected to finally cut interest rates for the first time in 4 years, as it aims to achieve moderate growth and low inflation, the Goldilocks scenario. On Thursday, it's the turn of the Bank of England, but the chances of another rate cut seem low. And on Friday, the Bank of Japan is also expected to keep rates on hold, but markets will be looking for any signal on when they might begin to hike them. To help dissect all of that, I'm joined by James Smith, developed market economist at ING. James, thanks so much for joining us. Well, let's start with the Federal Reserve. The markets seem to be more and more convinced that we'll get a bumper 50 basis point cut on Wednesday. How about you?
We think it's a very close call. We think probably the latest data that we've had on US CPI and the jobs data pushes the dial slightly more in favour of a 25 basis point cut this week. But you can certainly see the logic of going faster. There's a sense that maybe the Fed is slipping behind the curve a little bit. We've already learned recently that there's going to be big downward revisions to the jobs numbers that we've had so far this year. The jobs market not looking as good as we first thought. Some of the anecdotal evidence from the Fed as well is suggesting that conditions are beginning to weaken across the economy. So you could definitely make the case for moving faster. Listening to Jerome Powell, the Fed chair, recently, it certainly seemed like he might want to go faster. I'm not sure all of his colleagues agree, though. So maybe 25 if you had to pin me down, but it's a very close call.
But what would an impact be of a big rate cut by the Fed have on other central banks across the world?
That's a good question, because over here in Europe, it seems like there's a bit more gradualism. Obviously, the Fed has been a bit late to the game compared to the ECB and the Bank of England when it comes to cutting rates. But, other central banks haven't had the sort of big Jerome Powell moment, if you like. You remember, he stood up at Jackson Hole a few weeks ago and he said, the inflation battle was won. We don't need to see any more weakening in the labour market. We've not seen that so much yet from other central banks. But having said that, I think, if the Fed does kickstart with a big bumper cut, if they cut at every meeting, I think other central banks will ultimately follow suit.
Now, on Thursday, it's the turn of the Bank of England. Policymakers cut rates last month. What about this month? Are we expecting much here?
No, we're not, in a nutshell. I mean, as you say, they cut rates last month, but you wouldn't really know it listening to their recent commentary. They've been a lot more hawkish than other central banks. Really don't want anyone to run away with the idea that this is going to be a rapid string of rate cuts from the Bank of England. So I don't think we're going to get a rate cut this week. It sounded like from recent commentary, they're very happy with this quarterly pace of 25 basis point cuts. Certainly services inflation is stickier than we've been seeing in the US and the Eurozone, for example. That's making Bank of England officials a little bit more cautious. So we don't expect the next rate cut until November. I'm not sure they'll tell us a huge amount in terms of signalling of what they expect this Thursday. But after November, I think there's no reason to think the UK will be any more gradual when it comes to cuts. I think things will accelerate as we go into next year.
And on Friday, it's the turn of the Bank of Japan. It's a very different situation there. No change seems to be the consensus. But will they give any signals on when they'll start to hike rates?
It seems like the Bank of Japan's treading a little bit more cautiously. Obviously, last time they did hike rates by 15 basis points and all sorts of chaos broke out in financial markets, not just because of that, but obviously there was the big fallout from the carry trade unwind in the yen. Now, that stronger yen we've seen since the last meeting and also the general market backdrop has made Bank of Japan officials a little bit more cautious. It's maybe pushed back the timing of the next hike. We expect the next hike in December, but nevertheless, there are further hikes on the way. Seems like the conditions for those are in place in Japan. As I say, for this week, maybe a little bit more caution.
James Smith from ING, many thanks for your thoughts. And that's Macro Matters. Don't forget you can watch more videos on Reuters.com.